Hey everyone, Ben here and welcome to Motivation to Invest. Today I'm joined by John Lee, the CEO of Silver Elephant Mining Corp, a silver mining company on the Toronto Stock Exchange with the ticker symbol ELEF, and it's also on the OTC SILEF. So John Lee is a chartered financial analyst who graduated from Rice University with bachelor's degrees in economics and in engineering. So thanks for joining us today, John. Great to have you here.
Ben, thank you for the invitation. It's good to be on your show. And thank you for the introduction.
Yeah, it's great. It's great to have you, someone of your sort of knowledge and background, obviously in the mining space. So how did you get started in that space?
Ben, I started my career in the Silicon Valley in the mid 90s. And I was doing very well. Made quite a bit of money in the software business in the Silicon Valley, and got semi-retired in around year 2000 when the company I worked for got taken out by Oracle. And then my girlfriend at the time was from Vancouver, Canada. So we went up there for a holiday, and you cannot be in Vancouver and not get involved in the mining business. And that's how you got started. I started as an investor, and back then, you were from the UK. Gordon Brown dumped the last batch of gold from Bank of England at $250 an ounce, and that was the bottom for the gold market. And so I started investing in the junior mining sector in around 2001, 2002, and was doing really very well as a bachelor until 2009 financial crisis came. Then my portfolio was decimated, and then that's how starting a company come about. It was just picking up a shell of a company. I was a major shareholder, and then embarking on the path of consolidating assets and thinking as a hobby than anything else. And all of a sudden, it's 10 years later, and Elephant is being around. And in the last 10 years, we have raised probably over $150 million and accumulated a lot of knowledge in M&A, in building a team, in getting assets all around the world, and to where we are today. Endured a decade of pain and suffering through a bear market in the secular bear market in the commodity space, but looks like bottom's in, and we have at least a couple of years of good times ahead. Dan.
Yeah, I completely agree. There's the Chinese phrase for, I think it's when there's a crisis, it comes in two parts. One is danger and the other is opportunity. So it seems like you actually took that as a major opportunity. What I want to do is point out this point here. So obviously silver price at the moment around $25 an ounce.
Yes.
Previously it was around $15, $16. So it's actually spiked quite high even this year, 2020, 2021, which is obviously great news for your company and anyone else in the silver mining space. Back in 2011, there was this major spike to nearly $50 an ounce. Do you think this could potentially happen again?
It's certainly possible. And silver has made a couple of attempts in the last 9 months to take out the $30 level. There isn't a whole lot of from technically speaking, there isn't a whole lot of resistance when silver go past $30. So that's first of all. Secondly, what happened in 2011, silver has always been an interesting market that trends well with gold and commodity and copper and oil, and trends inversely to the US dollar. And 2011 was a manifestation of the monetary easing from the financial crisis in 2009. And the quantitative easing and the money printed didn't come to fruition until the full effect of that until about 18 months later. So that was sort of fundamentally the reason for the silver run up to $50. And, interestingly enough, Eric Sprott, at that time, he was making a run on the physical silver and coupled with a couple of Asian investors. And it wouldn't take a whole lot of a hoarding of physical silver to make a run at it, because you look at an annual production of about 1 billion ounces a year, and back then it's at $20 silver. So somebody could theoretically buy up all the silver's annual production with $20 billion of cash, and that's not a whole lot to speak of, especially now, given that 10 years later the monetary aggregate has expanded multiple fold from 2011. So I think in the end, 2011 was the product of speculative capital of physical hoarding from Asians and from Eric Sprott, and on the backdrop of a monetary easing 2009, and they're seeing that full effect of that. And there's a lot of parallels, Ben. As you can clearly see that now we have the COVID that took place in 2000 and 2010. And if anything else, Ben, what I've observed is the pace of the quantitative easing and just the pace of all the events are unfolding is gone much faster, by 2x or by 3x. So I would say it's taken almost what, 2009 crisis, right? And 2 years later, silver went peak of $50, and we're not even 1 year out from the peak of the COVID crisis, and we're already tinkering at a $30 level. So my gut feeling is we are probably already at the bottom of the 7th inning of a baseball game. And while there's a lot more volatility, so you're looking at just recently, silver oscillated from 30 now at 25 is a 20% correction. But keep in mind that the greatest gain is always at the bottom of the ninth. You saw in silver in 2011. You also see that in uranium market 2006 when it went from 10 to 100. You see oil from 10 to 100, and also .com, right, from 1,500 to 5,000 back in the late 1990s.
I agree. I'm seeing a lot of parallels at the moment between what happened in 2011 with the quantitative easing, basically government money printing, Federal Reserve printing money to try and solve all the problems. But that just can't go on forever. And investors will retreat to assets like gold and silver as a hedge against that. But what I do like a lot about silver, it's got the industrial applications as well. So you've got sort of two ways to play it, and the prices are generally governed by supply and demand. As we can see, if demand is going to increase in the future, I don't know if you've seen the tailwinds from Biden. So the Biden administration, on Joe Biden's website, joebiden.com, he wants to ensure the US achieves 100% clean energy economy and reaches net zero emissions no later than 2050. So of course, that's going to require a lot of electric vehicles. And what I can see here is electric vehicles require twice as much silver as the internal combustion engine vehicle. So I've even got the grams. So 15 to 28 grams of silver per internal combustion engine vehicle. Electric vehicle uses 25 to 50 grams of silver per vehicle. So to me, that's a major tailwind. You've got supply demand, you've got money printing, you've got electric vehicles. So yeah, what are your thoughts on that?
Oh, you touched on a lot of subjects. First of all, the quantitative easing aspect of it, Ben, is this time around is quite different from last time. Back in 2009, the problem was localized to the U.S. mortgage markets. And at that time, the money printing had a lot of outlets to go, such as foreign currencies like the Aussie dollars and Canadian dollar that had a yield differential of, Aussie back then was yielding 5-6%. So there's a lot of outlets. And this time around, the magnitude of quantitative easing is growing to a global scale, where every single country is running budget deficits and negative GDP growth. At the same time, you couldn't really tell the difference from Aussie dollar, from Canadian dollar, from the UK, the British quid. Everybody's yielding negative. And so increasingly the choice of investments is dwindled down, which makes silver more attractive. You are right, Ben, that silver has got this interesting industrial demand and investment demand. And not only is silver required for electronics in an electric vehicle, but it's also a critical component for solar energy. Elon Musk had mentioned before that the solar energy is enough to power the entire Earth multiple times over. So you're gravitating towards solar energy and electronics, and all the gadgets that you use require silver. But keep in mind though, Ben, for the way I look at it is silver, what's principal driver for silver price has always been the speculative demand. So what happened is the industrial demand will underpin the basement levels of silver. So if you look at the chart per se, the industrial demand is going to help silver price establish what I call the higher lows. Okay. So, but then it's always that speculative demand, this spike from the investment demand, that drives the silver to the parabolic action that you're seeing. So therefore, if you look at recent action, it's a very good example. Silver started out $17 in July of last year. It went to 30 almost in less than a couple of months. And now what we're seeing is the silver price establishing higher lows. So we were seeing $21, $22 earlier this year. And I think that now the 200-day moving average for silver is around 24. And there's a bit of uptick on the dollar index, a bit of a correction in equity that's putting a downward pressure on silver. However, I don't see the silver price go much beyond 24. I don't think it's going to go beyond 24, which means that the downside from here is maybe 3 to 4%. And a bit of consolidating. The dollar's upside right now is around 91.5, and it's probably around 92, 92.5. I would say that's probably the major resistance for the dollar, major support for silver, and a bit of consolidation. And the thoughts are, and then the fundamentals, I think, is going to come to roost again, given that the government is printing around $2 trillion that every quarter, and there's no way out. That is a big difference between 2011 and 2021. 2011, there's the talk of resuming to normalcy, budget balancing, budget normalizing interest rates. But Ben, all of that is out of the window. You're not seeing that any horizon at all. The deficit issue is not even talked about anymore, and that is really providing a bit of comfort for me versus say in 2011 when that was the top for silver. I think this time around you're going to get the extra leg of inning to go.
I completely agree with what you're saying there. I'm surprised you're so conservative. Obviously, you're in the silver industry. I'm expecting you to have more of a bias towards obviously silver going higher, because if you ask anyone who's in the silver industry, gold industry, where are silver and gold prices going, they're naturally going to say, oh, it's going to go really high. But what I do admire about you, John, is you're quite conservative with your estimates. And I actually admire that a lot, because that's great integrity. And that's what we look for when we're investing into companies. We look for management with integrity, management that are realistic. And that's what I can see from you right now. So that's a point for you there, John. Great stuff. A couple of statistics here again. So solar power is expected to triple by 2030. For those that don't know who's watching, basically silver's got superior electrical properties, and that's why it's commonly used in a lot of electronics, especially for the contacts. Like you say, that's a base, the industrial use. But to me as an investor, that adds a peace of mind, because I know it doesn't just matter about the speculation and the trying to predict what crowds are going to do. Like we can see Bitcoin price at the moment and cryptocurrency. That's something you can't physically hold, touch, feel. Bitcoin's at $50,000 for one coin. It's got no real sort of benefit. And at least with silver, you can solar panels, electronics, and at the moment, I mentioned to you before we started filming, there's obviously a global semiconductor chip shortage. So there's obviously going to be a major boom in electronics, and silver can have that massive industrial use, and then combine that with the tailwinds from all this money printing, Federal Reserve, government debt. And to me, it just seems like a winner. I do have, full disclosure, guys, I do have silver in my portfolio because I do think it's a great sort of asset to have.
And you know what? Again, you touched a number of points, which I found to be interesting. First of all, I recommend everybody just take an ounce silver eagle or Canadian maple, put it in your pocket, and it gives you a sense as to what the relative value of silver is worth. And that really goes back into the intermarket relationships. I don't see I don't have prediction for silver this year. I think the fundamentals, sort of the stars are not as aligned for silver as it was back in July of last year when I say silver is going to go to 30 when silver is 17. To really have a forecast for silver, you got to put in context. For example, if oil is at $30 and silver is at 100, I would say silver is very overpriced. So right now, I would say silver is actually fairly priced if we were to measure a gold to silver ratio, which is at around 70-ish, and that is the historical average. So that just showed me that there is not actually extreme optimism in silver market right now. And also there is a fairly well-established trend of ratio between silver. So silver also trends sometimes with oil. And given Biden's frac sand and banning of pipelines, so that's going to have a positive effect on oil and therefore on silver. And also on copper for EVs requires 80 pounds of copper per pound per electric vehicle. So that's also going to have a positive impact on silver. So even though gold is taking a back seat, but silver does also have a trending with copper and oil. And you mentioned about the government Biden's talk about renewables. I think the Congress just passed or are tabling a resolution where all the federal vehicles are to be phased out of industrial combustion engine in the next couple of years, and you got Nancy Pelosi there buying Tesla stock options. So that's telling you something about the future is headed. And so I wouldn't. I agree with you about the future silver. However, I think on solar, the annual production of annual demand of silver for solar is at about 100 to 200 million ounces. That's pretty stable while the amount of solar energy is increasing, but because of technological breakthroughs, per ounce of silver required for same amount of coverage for solar panels is going down. However, nonetheless, as I say, industrial demand always established that base point. And what you really want to watch out for, Ben, is the physical demand with the monetary displacement. And there's a very good matrix to watch, and that is a PSLV. If you look at the volume of PSLV, which is broad silver ETF with actual physical silver backing, third of an ounce backing the share of PSLV, the volume is trending very well, trading something like the top of 30 million shares a day in the good days in February. And Ben, that's $300 million. That's 10 million ounces. That's 10 million ounces a day. So on a conservative basis, PSLV could be hoarding something range of 20 to 50 million ounces a month.
There was also the Reddit short squeeze. I don't know if you heard about that. See, the internet's become very powerful, especially in the investing world at the moment. I look at it the same way a video can go viral, or an image, or anything else, news, an investment can go viral. And I feel when that happens, you can see major booms. Like, even look at a stock like Tesla. Like, I think Tesla's a fantastic company. But there's no doubt that the tailwinds behind that were driven massively by social media.
Or light collector. I'm a bit of a watch collector, right? Audemars Piguet, all of a sudden, Roy York, everybody on Instagram is showing that, and the price has gone parabolic. You're absolutely right. But you know what, Ben? On the short squeeze, I expanded on my thoughts in a couple of other interviews. What happened was great, Ben, in that people got fleeced, right? For the first time, people buying into futures, buying ETFs. And in fact, when they buy ETFs like SLV, they're actually shooting themselves in the foot, because what's happened is they're putting silver maybe into the vault, but that silver is taken out of the vault, borrowed by the commercials. In turn, is used to smash the very market of which you're long. So I think the guys got smart. This is not a difficult exercise to understand. And now they're getting really smart. They're like, hey, you know what? We got fleeced for the first time, right? We bought silver, got put in the vault, was being borrowed by the commercial, be smashed. And with all the nefarious dealings as SLV, and people got smart, and you can see the ratio of volume of PSLV versus SLV. So as PSLV volume continue to trend up, you're going to see, as I mentioned one more time, the higher lows. That's really what you watch out for, and not necessarily be so discouraged by the smashing up by the commercials at these critical resistance level, because unfortunately the facts are, on a given day you could have the futures trading on silver upwards of 100,000 contracts, and that's something around 50 million ounces in a day. It just so. The folks out there can smash the market at any given day, but eventually it's the physical demand, especially the physical investment demand, that is gonna prevail in the end.
Let me just quote Elon Musk here. So this was from an earnings call in 2020, and he basically said, "Please mine more nickel. Tesla will give you a giant contract for a long period of time if you mine nickel efficiently and in an environmentally sensitive way." So for those that don't know, nickel is a key component in batteries, makes batteries more energy dense. So basically longer range, faster recharge, all comes from nickel. And your company, Silver Elephant Mining, of course, also mines nickel. So yeah, what are your thoughts on nickel?
Well, Ben, the company's primary focus is silver, and we have 120 million ounces of silver, has 3 wonderful silver projects, which we are adding ounces in the ground. And our mandate is to add ounces in the ground rather than putting in mining production, at least at these prices. And we thought that's the best way to provide a value for our shareholders, by providing the leverage and proxy to silver pricing on a leverage basis. We acquired this nickel project a month ago, and it was just an ideal acquisition for us. And because that Elon Musk's quote, Ben, Elon Musk is the richest person in the world, and his IQ is probably bar none. So when the richest person in the world and one of the smartest guy in the world is telling you to mine nickel, you listen. And that's what we did. We acquired the nickel project in the 5th largest nickel sulfide mining camp in Canada. And the project, it was a distressed asset, and we got the asset as a good deal, and through acquaintance of mine that I've known for 15 years. And we closed the deal quickly, offered cash upfront, and has, we believe, up to 1 billion pounds of nickel in the ground. And Ben, nickel is used for batteries, as you said, for faster recharge and for longer range, which are the two sought after items for the current EV owners, the feedback. And any conservative study, Ben, if you do, will tell you that there's going to be at least 30% EV penetration in the next 10 years by 2030. 30%. Right now it's around 5%. So I don't think it's a leap of faith to see that 30% as now you can see Tesla every day, everywhere in the world. And to achieve that annual production of 30 million EVs, 30% penetration, 100 million vehicle production per year, you need around 2.5 billion pounds of nickel. And the total world production right now is around 6 billion. And this year, 2020, production was on a decline, 4% decline from 2019. So if you do the exercise, okay, you're going to need 40% more nickel 10 years from now on the market that's already experiencing structural deficit. We see a perfect storm for nickel, and Elon Musk obviously see that there's not going to be substitute in the near-term horizon for nickel. In fact, the market is moving away from cobalt towards nickel, and there's no substitute for at least the next 10 years, if any at all. So we see an incredible market, and I know we see that as a good almost like insurance policy for silver, because like I said, I mean, silver is a market with some actors that are non-profit seeking. So it's always a little bit difficult to play that kind of cat and mouse game. You get really frustrated because you see such great fundamental for silver, but you got some actors that are out there and they're meddling with the market. So just thought that having that nickel alongside silver really provide that 1-2 punch for us, and completes the company Silver Elephant as a company of energy metals, of the metals of the future.
I actually like that a lot. I like that a lot. So you've basically diversified out. So you've got silver, and then obviously you've gone into nickel, and you were pretty much bang on with your sort of predictions from just using your own sort of common sense. So I've got a statistic here. Nickel consumption in EV battery materials is expected to soar 64% between 2019 and 2025, according to Wood Mackenzie. So it seems everything's go for nickel, like you mentioned about cobalt. So I believe most manufacturers are trying to phase out cobalt because it's the most expensive, I believe. And then they're trying to move more towards nickel and obviously lithium as well. So yeah, let's go on to your company a bit more detail. So Silver Elephant Mining. So you've got 3 silver projects in Bolivia. So you've got 120 million ounces. That's confirmed in the ground at the moment? And then you want to increase that to 300 million ounces by increasing the drilling program. Okay, so here's a really simple question, and this is something I always look for any company invest into. What's your, you don't have to go into specific numbers, but what's your insider holding in this company? Do you have a large percentage, small percentage? What's roughly your percentage?
Yeah, I own 10 million shares. That's roughly about 5% of the company. And I also have about 20 million warrants and options through prior participation of financings. I don't get them for free. So altogether, on a fully diluted basis, I own just under 15%.
You've got skin in the game. So you're basically a shareholder with anyone else who's potential shareholders. And that's what I like to see. Okay. Do you want to talk briefly about your team? I'm assuming you've got a selection of geologists and they're obviously searching for these deposits. So do you want to talk about your team and the relevant experience they have?
Ben, we really built the company from the ground up. And myself is considered an outsider to a bit of a legacy industry, nostalgic industry. And the company is successful because the failures of the so-called industry veterans that had led orphan projects unattended because they went through bankruptcy. And that is really a recurring thing of how we get our projects. They're left over from the last cycle that couldn't make the last commodity cycle. We get them on the cheap. We look for people that are energetic, who are smart, good at what they do, but also have good chemistry, working around the clock and motivated. So right now we have 9 geologists. We have 2 qualified geologists on staff from used to be formerly with Hecla, and for our silver side, and for our nickel side is formerly with Falcon Bridge and Inco. And we have a vice president of environment. He came from Barrick and McQueen Mining, so he really cares of the environment, like all the aspects of the environment and community relationship. And on the board of director, we have Marla Deuce, which is formerly the president of Bear Creek Minerals, and he also is an ex-Barrick. So we have a lot of the ingredients and a team with great chemistry to take the company to much greater heights. And we also have a number of advisors on the ministry level, on the federal level, on the community level, at the provincial level, just to keep an eye on all the dynamics of operating in country like Bolivia or anywhere else in developing countries.
Yeah, you need to be tight with the locals, don't you?
We are currently, the main project name is Pulucayo, that has 120 million ounces of silver based on almost 100,000 meters drilling. But what's really exciting, Ben, is we acquired this project called Sunawayo last September, and we started drilling in December, and we put out the results just 10 days ago. And the first hole hit 137 meters of 36 grams of silver. We're very pleased with the width of the intersection of 137 meters. The silver grades are very uniform throughout the entire reported interval. So that is a good indication that the mineralization will continue at depth. And it starts on surface. That's another good thing. And then even though the grades are a little low, we started drilling from the northern end of the project, which is the least sexy part of the project due to access. It was about higher elevation as we're going down the valley. And we have another 13 holes to report. It's a 2,300 meter drill program of a 60 square kilometer land package, massive. And the last point on that project, Sunawayo, is we did sampling and mapping on the southern half of the project, 50% of the project. 950 samples are taken, 87% reported silver grades, 87%. Wow. So, and because if the hypothesis that if the majority of the mineralization does from surface, well, that makes the exploration a lot easier, right? If you see it's higher silver grades on surface, and then so that would be a very good indicator as to what may be bearing underneath. So I think just a combination of massive land package, extensive trend of 8 kilometers bearing silver samples assays on surface, and now we hit the first hole, 137 meters, with very little guidance. And, we just got our hands on the project less than 6 months ago and taking out Christmas. So I think we're very excited. We have 9 geologists working on the project right now. And with additional drilling, if the results from the remaining holes turn out to be as good or even better than the first hole, they'll be looking at a bona fide major silver discovery on this project, which will complement very well to the Pulucayo project, which we had already drilled out and proved up 120 million ounces. Bam.
I did a bit of research on Bolivia because initially some people may think Bolivia is obviously a dangerous area. Perhaps there could be political uncertainty. So perhaps that's a risk which you'd have to take into account with regards to the investment. But I actually did a bit of research here. And what I found is here. So surrounded by nations reeling from economic crisis, Bolivia remains a rare example of economic stability and growth. And in more than 12 years under President Evo Morales, and poverty has dropped steadily in South America's poorest country, helped by soaring natural gas production. So it seems Bolivia is actually one of the best places to be in South America.
Well, Ben, Bolivia has a very strong mining tradition dated back to the 1600s. Even though there's a lack of foreign investment in Bolivia, but it still managed to be the 6th largest silver producer in the world today. Bolivia today produces more silver than Argentina, and this shares the same geological trend. Bolivia had experienced Bolivia GDP has tripled in the last 15 years, and governed by the Evo Morales party. Our team, Elephant's team, is being Bolivia. Technical team is being Bolivia in the mining sector since 2005. So we have coexisted with the government. We work very well with the government. Also, we work very well with the local communities. And our secret band has always been take care of the locals, right? Because we're in their neighborhood. And that's our secret success. We have worked very well in Bolivia, and we're getting more optimistic, and we think that the country is due for re-rating. and the countries demonstrate stability. And the few mining companies are in Bolivia, the Coeur d'Alenes, Pan American Silver, Orvana, and Orvana, Pan American Silver, Sumitomo had all been operating in Bolivia in the last 15 years without issues. So I think it's one of the very few locations I think it's misunderstood as due for re-rating. And we feel very comfortable in Bolivia. I'm the largest shareholder of the company. We're tripling down on Bolivia by acquiring more assets last year. It's the busiest year in our company history. And it's one of the few countries we think that has a very good risk versus reward ratio, reward versus ratio, given that some of these assets are absolutely huge. I mean, we have 120 square kilometers of areas of land across our 3 projects. And that's why we put out this ambitious target of 300 million ounces. We're only into February. We already made potentially a major discovery. And I think that if the remaining 12 holes or 13 holes pan out, that's good or even better than the first 2 holes. We're well on our path to achieve the objective. And I think, Ben, 300 million ounces is not to be sneezed at. I don't think any juniors actually can make that claim. Probably less than 5. And all of them are multiple of our market cap. And that's why you're seeing a lot of turnover, because I think a lot of investors are looking at Elephant as a legacy company with the legacy management, legacy project, which is further from the truth. This company has a complete makeover in the last 12 months.
Very passionate about your business and you're very sort of involved in it. And I think that's a great trait to look for from any CEO. Like, that's what I always look for. And the fact that you've obviously come on here to speak to potential investors is a great sign also, because not many CEOs will even do that. And they're missing out on obviously actually connecting with the people who are going to be investing into the business. Let's dive into a few more technical details now then. I'm just going to run through just a few things I look for generally when I'm investing into mining companies. So you mentioned about Bolivia. What's the infrastructure like there?
Ben, we have excellent infrastructure in Bolivia, compared better than Peru and Brazil and Colombia, where have made a number of services. For Pulicayo, for example, the project has access to water and power on site with skilled labor generational miners. And within 200 square kilometers, with the 200 sphere radius of Pulicayo, collective silver production exceeds 30 million ounces today. So you have the world's second largest silver mine, open pit silver mine, Sumitomo San Cristobal, active today. So we're sharing the same infrastructure. And there's a paved road right on site to the property that connects to a railway, of which you can ship concentrate to Antofagasta, which is a major Chilean seaport. So in short, excellent infrastructure with skilled labor.
Right. Okay, that's a tick for that box then. You've ticked that box. What's your mining method? Are you more open pit, underground?
Well, Ben, Pulicayo was the second largest silver mine in the world based on historical production. So they were mining silver veins exceeding 500 grams per ton. So a lot of the veins, higher grade veins, is being mined out, but the lower grade, still very respectable today at 300, 400 grams per ton, still in there. What we've done in November, Ben, was to reconfigure Pulicayo from a legacy underground mine into open pit, because the mineralization extends all the way to surface, so that we can also claim that lead and zinc credit. So both the Pulicayo and Sunawayo, we're looking for it to become a open pit mining operation.
Okay, that's great also. So I've got here, basically, there's no real right or wrong answer. Open pit's generally lower risk because it's just generally low risk, lower cost. The underground can be higher cost, higher risk, but the grade can be slightly better.
In a low metal prices environment, you want to go underground, high grade, low tonnage, low footprint, but high margin. But in a rising metal environment, low grade, large deposits tend to do better because of the leverage factor. So you want to have if you go to open pit scenario, you're going to have more contained metals. And as metal prices go higher, then the operation could be inclusive of additional metals, right? Whereas underground, your mining sequence and your mining method is fixed. You can't say, well, silver went up $20, so you want to increase the mining width, or you want to dig a bigger hole. You are stuck with the mine plan. Whereas open pit, you can do more shovels, you can reconfigure open pit. So there's a lot more flexibility and higher leverage. in a rising metal environment to go open pit.
I'm definitely learning a lot from this video, and I'm hoping the audience is as well. Operating costs. Now, this is the obviously difficult one, potentially. Do you have an all-in sustained cost?
Ben, most people don't know. Even the guys that's done feasibility studies, and they're way off. And the PEA is off by 60%. So, Ben, our thoughts are right now to just develop and grow our resources in the ground. And what I found through working in the industry for a decade and having met thousands of people, investors and industry insiders and veterans and gurus and legends and all of the varieties, exploration business is completely different from mining business. Mining is about discipline, engineering, foundation, building a house. Exploration is art, it's creativity, it's dynamics, flexibility, it's looking out for good assets, it's thinking outside of the box. So Ben, we're in the exploration business. It's all we do think about is looking for good assets, find ways we can add ounces in the ground, think outside of the box, add as much resources in the ground. So that's what we do. Ben, I've invested in well over 100 junior companies myself. So we do, and one of the things we look out for, Ben, is like, as you mentioned, infrastructure, community relationship, permitting, government relationship, to make sure that there's no irreparable handicaps so that the only thing will stop the mine from going to production is capital and rising metal and the right metal prices. So we want to make sure that the project is fundamentally sound, but whatever that break-even point, we don't know. But Ben, you know what? The company will transition into an engineering or mining company with the right makeup of the management or sellout or joint venture. When we think a mine would have a 35% IRR, a 3-year payback, it has to be a no-brainer for us to come in that risk, to raise the money, to raise the debt, to put the company collateral, to really plunge into production, because it's a totally different animal, right? Much higher fixed costs, a lot more risk, a lot of things have to do to be right. But in order for a company to do that, we have to make sure that the project is absolute no-brainer. Even a monkey can see it's a no-brainer project. We're not interested in putting a mine to production with a 15% IRR at the 2% cost of capital when those are not the configuration of what you're looking to. So we're not going to sweat over those details about, all the sustainable capital costs, CapEx, OpEx. I think a lot of that is very pedantic academic exercise that doesn't really do anybody justice at this point in time.
Valuation. So this is just an estimate I've done. 62 cents per ounce for 120 million ounces of silver. So if silver went to sort of $40, $50, then we get $1 per ounce multiplied by 300 million ounces, could give a market cap of 300 million. Your current market cap, I believe, is around 80 million. So
yes,
that's the potential. So to me, the valuation's not too bad at the moment. And there's a lot of upside potential. What are your thoughts on valuation and how to best value a silver mining company or any mining company for the viewers watching?
Yeah, well, Ben, I'm a CFA. I have an engineering degree. Evaluation for mining companies is more art than science, especially in the junior sector. Even for producers, combination of optionality, silver reserve in the ground versus cash flow. At the basic matrix, yeah, you can do 60 cents. And obviously, as the silver prices go up, you can touch higher valuation. And then depending on the stage or the grade of the asset, you can change the adjustment accordingly. However, Ben, if you rely on empirical evidence, Silver Elephant is trading, the share price is trading lock in step with the silver price and with increasing volume. So the way I look at it is our objective and mandate for the company objective from technical perspective is to prove at 300 million ounces. But if you look at the chart technically, what we like to do is to track 3 times the return of the silver. Okay, so if the silver come up 60% or 80% from 25 to 50 or double, you will have 3 times the return, which is kind of roughly in line with what you're talking about, $1 an ounce at 300 million ounces. And secondly, Ben, while we're tracking silver closely with the leverage, every time when you make a new discovery, you're adding more ounces, you're just going to have a bump, right, in the valuation. So the way you look at it is it's going to do up and down just like silver, but every now and then you're going to get a positive news from one of our projects that's just going to elevate Elephant at a higher platform, continue the same trajectory as silver prices. So in a way, we see ourselves as probably the least risky option in the silver junior sector because we have so many horses in our stable. We have such a large land package, and we don't have the production risk, right? We're not tied to, say, the economics or the return or feasibility of a project or construction costs and whatnot, et cetera. So we're very much a pure silver leverage play that is tracking silver price closely with that upside every time we get a positive surprise on the exploration.
Great advice there and great info. So I can see actually, because your market cap's quite small, 78 million. But what I like about that is you're quite stable for a company this size. So you've been quite stable really relative to I looked at other companies that same size, they've usually going from
You're
here
going
to
like
here.
this.
Yeah, all the time. So that's actually a positive. Silver Elephant Mining Corp, Toronto Stock Exchange, ELEF, that is the ticker there. And then got it, SILEF, all
The
details.
silver, first three letters, the silver, last two letters of the elephant, EF.
Okay, that's a great way for everyone to remember that. So I'll leave details for that in the description below. Any final thoughts, John? It's been very informative. I've definitely learned a lot about the silver mining space.
So because I don't have time to write anymore, I do a lot of tweets on my Twitter. Just seek John Lee Silver Elephant Twitter. You'll see a lot of market thoughts. I tell it like it is. And right now, I said I wasn't sure about silver breaking out of 30 in the first quarter. And it looks like we're still in a consolidation pattern. Secondly, Ben, the company's been around, so it has a bit of legacy volume. So we've done a lot of acquisitions. So the old shareholders are caught in the blind, a bit of a bind, and new shareholders are just catching up. So we're in that transition period. However, I think once that base has been established around 40 to 50 cents, once it breaks out, it's going to go because that will be a 10-year. There will be a 10-year consolidation, and because the volume can clearly see there's accumulation. So we're steadily making advances. And the new shareholders coming, understanding our project, understanding our philosophy. Look, it's preparation. Preparation means opportunity.
That is true.
So I think the opportunity is going to present itself very soon when silver break out to 30, and we are well prepared. We have an excellent vehicle.
You're poised and ready for it.
Yes, absolutely. There you go.
No,
we
great
have a strong identity. We have great projects. Our management. We have great institution support. Great research coverage coming from the three investment bankers. And I think you're going to see a lot of actions. The goddess of luck favors many action. Again.
Great stuff there. Great info, John. Great to have you on. Very informative. If you do have any comments for John, be sure to follow him on Twitter. I'll leave all his details, all the details about the company and all his details in the description below. Been incredible. I hope to have you on again in the future. And definitely, keep us updated on. Great to have you on. Cheers for that, John.
Thank you, Ben. Look forward to be back providing exciting updates.
Okay, cheers. Okay, so that was John Lee from Silver Elephant Mining Corp, the CEO. So if you guys did find some value in this video and you did learn a lot about the silver mining industry and of course his company, then feel free to give this video a big thumbs up. That helps out tremendously with the channel. If you haven't subscribed yet, feel free to join the investing family by hitting that subscribe button and turning that notification bell on. And with that being said, thank you guys so much for watching. I hope you have an incredible day and I'll see you in my next video. Invest safe.